Hello everyone, I'm Dr. Stock. This video is for entertainment purposes only. Today I would like to talk about some of the activity that we had in the stock market, some of the reasons that I think that we have for the red that we see in the stock market, and also some of the silver linings that we have going along with that as well. So I can't wait to tell you about it. Let's get ready to rock. Welcome back. If you're interested in seeing the dividend portfolio, the growth portfolio, and my weekly watch list of stocks, you can sign up over at my Patreon and also join the Discord that we have over there. You can take a look at those portfolios and that watch list, and then you can also talk stocks with me and the other patrons that are over there. It's a really awesome community. People are really coming out of the woodwork to offer the different stocks that they are interested in and to talk about and learn about and figure out different companies, where those different strengths are. It's really been a good time. So if you want to check that out, that link's down in the description. Love to see you there. Also down in the description is a link for Webull. By signing up and depositing $100, you get 2 free stocks. The referral gets me 2 free stocks, so it helps to support the channel. Thanks in advance for that. Finally, subscribe, hit the like button, hit the notification bell, share with your friends. Let's get on to the stocks. So a lot of the red in the market can be attributed to how quickly we're seeing the bond yield rate rise and seeing it approach what the dividend yields would return from the big indices, and also the inflation fears that we would have from all the new money printing that's going out there, and really waiting for the Fed to step in and do something about that. In the meantime, the stocks are sliding, and we get a lot of them that are selling off. I mean, it was just a huge red day. I think it was one of the worst ones that we've had so far, and the gains that we saw yesterday, a lot of them just got wiped back out by the stock market sell-off that we saw today. Now, I want to remind you that, especially if you're new, that if you haven't sold your shares, it's an unrealized loss, which means that you haven't really lost that money yet. It's just that your account is going to show red for that if you're down on the stock from your cost basis, from your purchase average purchase price that you have on whatever particular security is that you have. And as the market comes back up, or as the strength comes back into that stock, as these fears start to subside, is where you see that strength come back in, and it goes green again, which is an unrealized gain. So really, you don't gain or lose anything with that stock until it's sold. So for me, there's a lot more red that I'd like in my growth portfolio. I'm still up overall, probably about 30% from when I started it. However, I was up over 50%, but I knew that was kind of high. It was a little bit too much of a run up too fast, and I knew that it would pull back. I was hoping it wouldn't be this hard, but it was. My dividend portfolio is doing a little bit better because of those companies that I've chosen to put in there, that they're more mature companies. They're able to make a profit and pay out that dividend, and they have a high level of dividend safety. So some of them being dividend aristocrats, where they've had consistent dividend payouts for the last 25 years. So that portfolio has been doing better in terms of the sell-off than the growth portfolio has. So even the growth portfolio had a much faster run-up. You can see it was a much more risky play, and then it pulled back harder when the market pulled back. So this correction could go on for a little bit of time yet. I don't think it will all happen in a day. It might happen over a few days, or maybe even over a few weeks. But as we come out of that correction, we start to see a lot of green turn around really quickly. And if we're able to dollar cost average along through it, for me, I've been doing small amounts at a time across different stocks, across companies that I believe are solid companies, that as the market comes back to strengthening and takes over a more bullish look, that those stocks are also going to benefit from it. So I'm going to switch over to my screen. I'm going to show you some of those stocks that I really like, and some of them, a couple of them were up today, and a couple of them are down, and that's okay, because I believe in the fundamentals of the company and the long-term success of the company, and the ones that I'll buy into the correction as we go along, because as we get out of these red days, the strength should come back to those companies, that they're not going to be drowned by the correction that we're under. Alright, so the first stock that I have to share with you is Nano Dimension, and Nano Dimension I talked in depth about in a video in early January, and when we look at this chart, we can see that it had a great run up for a while, peaking at almost $18 per share, and it returned to that almost that amount, near that amount, a high of $17.77, so missed the high by about 12 cents. And then we had the huge tech sell-off, and we have a lot of correcting, and in my opinion, overcorrecting in their stock price as they go forward. The one thing that I'm cautious about with NNDM is the number of capital raises that they've done. They've said that they were comfortable with the $1 billion that they had in cash, and then they went and did another $500 million capital raise. If they continue to do that, it's something I'm watchful about, because that's something that doesn't really go well with the shareholders. It's okay a few times, but if it keeps on going and we don't really see any success coming out of the company as a result of all those capital raises, it's something that can really be off-putting to the investor. In the meantime, I'm still willing to give NNDM that time in the space that it needs to grow as a company, and watch it for the next couple of quarters and see them grow into the potential. And as long as they do grow into that potential that I see for them, I think that we have a really good buying opportunity that's here. So my original position for this was in under $4 a share. Since then, I've had several other positions that I've bought and sold, especially with their history of capital raises that they had. When I would see the price run up, I would sell it off to lock in some of my gains. So every penny of the investment that I currently have with NNDM is all from the profits that I made from investing in NNDM. So with that, my new position is, I had one at about $7, just under $7, and I dollar cost averaged a little bit more in, right around the $11 mark, just under it. And as of the market close today, $10.18. And if we look in the after hours that we have, we're riding right around that $10 mark. So for me, this could be an opportunity where I might buy in just a couple more shares just to add it on. I'm not going to throw every penny that I have of cash into any one stock, or even into all the stocks today or even tomorrow. What I will do is I will continue to use the cash that I have on the side to take advantage of these prices as they work their way downward if we continue to have a sell-off. And then when the market does go green again, it's reducing my cost basis for each of my securities that I own, and then that should elevate my stock price with it. And the overall value that I have for all those stocks should also increase, and I should be sitting in a really nice position for some really modest gains going forward within a relatively short time in the turnaround in the market. If you've watched my channel before, you'll know that I'm a fan of the Chinese EV companies that they have. NIO's my favorite one. Xpeng is also in there. I also like Li. So when you're looking at these, I didn't expect to see NIO under that $60 mark for a good long time. This might sound weird, but fortunately, what we have here is another buying opportunity, in my opinion, because I believe that with the earnings report coming out from NIO in March, that we're going to see some strength come back into their stock price, and it should be elevated from wherever it's at as we get nearer to that price. I believe that earnings date is next week, maybe March the 4th. I would have to go through and look to see exactly when that earnings date is, but it is coming up soon. It is the beginning of March, so keep an eye out for that. And also, if you're already an investor, there should be greener days coming. One thing that we can look at when we have these other sharp drops that we have, notice that they are higher lows than before. This one, it just passed that previous low that we had there, so it dipped just a little bit, but it wasn't able to take these other two lows that we had back in December. So even with the sharp sell-offs that we've had, NIO's still holding a somewhat higher price other than those other low points that we had previously. Just a quick look at the analyst estimates. $55 as the average estimate that we have, and it looks like there's 19 analysts on this, and I know it's a far drop down to the $7.73. I just don't think that that's very likely anymore. I think that that's pretty much an impossibility at this point in time. We're still $9 below, so about 20% below the average estimate that we have on NIO. So as we see the strength come back to the market, and on top of that, if we get really positive earnings that beat expectations, we're going to see a sharp increase in NIO's stock price. Rocket Mortgages, ticker symbol RKT. This is also one that I brought up in a previous video. I do like Rocket Mortgages. I did refinance already through Rocket Mortgages, and they really did make it so much easier than going through any local branch bank that I have near me. And I like them as a company, and I'm glad that I took a position in this. And if you look at the day that they did have a red day here, like many other companies, under $20. However, if we look intraday, this is where it gets a little bit interesting, because we're currently up over $21. That we had a run up in their price, and I believe that that's due to their announcement to pay out a surprise dividend on their shares. So we take just a quick look at their news. They say that they are going to put out a $1.11 dividend, and that's a special dividend payment that they're making. And if you take a look at it, you have people buying into it. Payable March 23rd for shareholders of record, March 9th, ex-dividend date March 8th. So you need to get into this if you're looking for that dividend payout. You would like to get into it before that ex-dividend date, so that way that money does go to you. It doesn't mean that you have to be a long-term investor in it, but you do need to be an investor in order to capitalize on the dividend payment through Rocket Mortgages. Alright, and the thing is that's fun about making these videos when you do them during the after hours or anytime the stock market's still active is that sometimes you get surprised by the news that comes out. Certainly by the time I'm done with production and get it up onto YouTube for everybody, it can be hours later. So this is kind of neat to see. 5:26 p.m. it says 2-minute read. Rocket Mortgage housing boom to 277% profit increase. And when we look down at the news coming out of Bloomberg, it sounds like they had a really good year coming out of 2020. So it's a company I'm glad that I invested in, and it looks like we really are seeing that strength coming through the company. This is on Yahoo Finance if you want to check it out. Last company that I have to talk about is Workhorse, and I didn't really expect to talk about Workhorse today. It did have that steep fall off because the contract has fallen through for USPS. However, that contract is being fought, and there's, to the recent price action, that's one of the things that's acting as a catalyst to pushing up the stock price for Workhorse, is that they're not being counted as down and out yet. I believe it was Oshkosh who said that 10% of the EVs would, or 10% of the USPS fleet would be EVs. Some people are thinking that that's not enough and that we need a more of a push in that. And when you look at this, we have that recovery. Another catalyst in this, I believe it was ARK Invest, put in over 600,000 shares into this when the company bottomed out. So I don't think that they believe that Workhorse is done yet, even if they missed that contract. I think that they still see a lot of fundamental strength in the company, and that really helps to push this price upward and elevate it a little bit from the bottoms that it was at. Just a quick look intraday so that way you can see the spike up that it had here at the end. It was kind of an insignificant day. It did close up around $18. It did go up and then settle back down again, but it is settling a bit higher than what it was before. So we might need to wait a little bit to see more of the strength come into Workhorse. However, I think that those of us who are investors in Workhorse, or those who are looking to take a position, do your research on it and see if it's a company that deserves your attention and deserves your dollars. Because I think it's at least worth your attention. I can't say whether or not it's worth your dollars. So I know some people absolutely love it. There's a lot of people that love Workhorse. I definitely like the idea of moving to greener, cleaner energies. I do believe that we need the environment first, and without the environment, we really don't have anything. So we really want to try and keep the earth clean, clean up the messes that we've made, and I think going to EVs is a step in the right direction. That we want to keep on innovating, that we want to keep on working, and moving away from those fossil fuels is something that will help to get us there. So let me summarize. The market is correcting. It's correcting pretty hard, and it's pretty stomach turning to watch that money, however much it is, whether you have hundreds or you have thousands or hundreds of thousands or millions tied into this. If you haven't sold yet, you're not really losing much of anything. The market overall, over time, does increase. The history has showed us that. I believe that this is a matter of waiting it out and having that cash on the side in order to do your dollar cost averaging. If there are companies that are underperforming and you don't think that they're solid companies, they were just speculative plays that had some hype for the time, maybe you could consider trimming the fat there a little bit to free up some of your cash flow if you're hurting for cash flow. Also, for myself, what I do is I have that money so that I can space it out over time, that I can invest over days worth or over a week's worth of time with dollar cost averaging in order to lower my cost basis, as I've mentioned before in this video. And I would like to see, as that strength comes back, then I have much cheaper per share averages, and that allows me to makes it easier for me to be up money overall. So for NNDM, I really do enjoy the tech plays. I really do enjoy their tech, and I think that they're at the beginning of something huge. And seeing them back around that $10 mark, hovering around that $10 mark, makes them a little bit more attractive. If they drop under 10, it becomes a lot more attractive as far as me taking an even bigger position in NNDM as we move forward with the market. NIO, love the price of NIO right now. If it drops below 45 again in the near term, in the near future, or even as soon as tomorrow, I'll even add to my position then as well and take the ride up with it as it goes up. Rocket Mortgages had some really good news coming out of it, a lot of strength coming out of 2020. And remember, real estate is expected to continue to be strong throughout 2021, and they're part of that real estate business with handling mortgages like they do. So maybe consider doing your research on that one, see what you think of it, see if it's worth your money. And then finally, Workhorse. Workhorse is down, but I don't believe that it's out, and there's a lot of big money that also doesn't believe that it's out. And maybe if it gets some traction with this fight that it has, this pushback against overturning the deal with Oshkosh in order for the USPS, so that Workhorse gets at least part of that or some of that. Keep an eye on that news to see what they have to say, if that pushback really is something that will go somewhere. If it is, we'll see it worked as a catalyst in the stock price. Also, we want to watch for other contracts that might come out that would be outside of that, and really watch those production numbers fly for Workhorse, because that's what we want to see. We want to see them putting out vehicles that drives their revenue and eventually turns into profit for the company, which comes back to us in a good way as investors. So that's what I have to say today. If you're interested in joining me and the other patrons, the link for the Patreon is down in the description. Also, if you're interested in a trading platform like Webull, that link is also down in the description. Sign up and deposit your $100 to get your free stocks. Thanks ahead of time for that. And if you haven't already, subscribe, hit the notification bell, hit the like button, share with your friends. Remember, this is for entertainment purposes only. Always do your own research and due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.